Peter McGuire joins in to talk more about how the world is looking at the commodities market, especially at a time when China's PMI has dipped into contraction zone below the 50 mark when it comes to the December manufacturing PMI number. Does that make you nervous about China's growth slowing down more than anticipated, Peter? Good morning.
Well, good morning. I think so. I feel as though that it's taken a little bit of a surprise act, and it really probably reinforces and galvanises the actual position of China over the last matter of the quarter, and culminate that with naturally the way that the US equities have been and that huge sell-off across all of Asia for 2018, and it's probably just a realisation. So it's going to be a fascinating next couple of months what happens from here.
Spell for metals at large, because you are seeing and one has seen that correlation and sensitivity. Anything going wrong with China means bad news for metals.
Well, traditionally, yes. I mean, when you're looking at the price of iron ore, you're looking at nickel and lead and zinc and aluminium, tin, all of that complex, and of course the grandfather of them all, copper. There's been a very much a mixed bag over the 2018 session, and then you saw, the huge sell-off of crude over the last quarter. That's about 80 days in, or 85 days since the start of that, massive washout. And it's very interesting when you lay them all across and you see the graphs. I feel as though that there could be continued down pressure for a number of these metal markets.
Mm. And so what's your outlook on commodities for this year?
Well, I think if you're going to look at, if you're looking at food, it's a different matter. I think food's relatively strong and great demand picture. And you liken that to the likes of soybean and corn and wheat and so on. I don't really think that you're going to see much of a washout there, because I feel as though that the US dollar could come off in the second quarter of this year as far as that US dollar index. So there you're looking at that part of it. If you're looking at metals, I think it's going to be a mixed bag, because I feel as though in some ways the crude market will take the lead off that. If we see further weakness or continuing softness, then that's going to drag them all down. I do say that precious is a different bag, because I think as far as the big picture, gold's got a stellar year ahead of it, and it'll be an interesting play. So there's a quick snapshot.
Right. Getting increasingly tougher, Peter, to really predict what's going on with crude, given how volatile 2018 has been. I mean, from all this prediction that it's going to touch 100, we're at a comfortable point right now for crude, and more so crude because of India's economic sensitivity to crude prices as well, and that being a big factor for us. Where do you sense crude prices are headed, and would you say that there is some stability and some semblance finally coming in?
Well, I would have thought this time last year, you probably thought that, this time last week, I should say, you probably thought that there was further softness. Then we had that strong rally and the market went up. It's oscillating, or it's consolidating at this sort of number at the moment. Let's see what happens over the next week or two. I think that'll give us a fairly good strength of it all, and what happens as far as the big pictures, the Chinese trade issues, the Brexit and so on, which will wash over the market in the next probably 5 or 6 trading sessions up until the end of next week, and then we'll get a clearer picture. But I feel as though the big issue at hand is, if we see continued volatility in equity markets, that's going to have a downward pressure as far as crude, and I think it's going to be further softness. It's a fantastic time for consumers, but it's not a great time to be a producer.
What about precious metals? Do you think that gold stands a chance to rally this year?
I think so. I feel as though that it's got the potential to take a $1,400 number out, and quite simply for this reasoning. The US dollar has seen a massive move to the upside since February, March of this year, of 2018, I should say. That over the last 9 months, it's nearly put on 1% a month in that US dollar index, and I feel as though that the US Fed is going to sit now on its hands. There was every talk that we'd see 3 or possibly 4 rate rises in 2019. I think we'll be flat out seeing 2, if not even 1. And I noticed something from Oppenheimer the other day that said the only rate movement we'll see this year is to the negative, 50% chance that it'll be down, not up. So there's so many mixed bags and so many different lenses looking at the global economy. But I feel that that's where that will underpin the price of gold. And I think gold will be a standout in 2019.
Do you believe that's going to be the big trade, gold, Peter? Or do you think there are other agri-commodities also wherein there is a lucrative trade for 2019?
The only way I think that crude's going to get a really big uplift is going to be geopolitical, because we're awash with crude. We've got excess capacity coming from all producers. So unless you see something dramatic happen off that side of it, then and all weather outages, of course, then you're looking at, I don't think anything's going to happen as far as foods, but you could see severe, Mother Nature impacts that could affect foods. And that's always an unknown with, hurricanes, cyclones, floods, droughts, and so on. And then if you're looking at from a precious side, I really feel as though that it's all stacking behind precious. And I feel as, that gold market has been really, it's been pushed down a little bit, where it's got that US dollar to worry about. And I feel as though that's going to be the trade. I think it's just nearly to the point of a perfect storm.
Okay, Peter, we leave it at that. Thanks very much for taking out the time to speak with us this morning. Wish you a very happy and profitable 2019.
Thank you very much. Happy New Year.